Well, I would argue that we are in a monetary reset already. Central banks are buying gold at a higher rate than they have in years. So they've got a backup plan. And this is how I see it. I call them as I see them. So this is somewhat subjective. The facts are they're buying gold hand over fist. What does that mean? Well, that you have to use some thinking, and you could agree with me or not, but I look at it as their money of last resort. So if the CBDC doesn't work, they can say, oh, wait a minute. Okay, we'll put out CBDC number 2, and it's tied to gold I do think gold certainly could play a role going forward.
Is a global monetary reset already underway, right under our noses? As cracks deepen in the global financial system, many are asking whether the age of easy money, inflated asset bubbles, and unstoppable debt has reached its final chapter. But what comes next? Is the world headed back to a gold standard? Or are we entering an era of total digital control through central bank digital currencies? Today, we dive into one of the most urgent and controversial topics in the financial world, an inevitable reset that could reshape the global economy as we know it. David Morgan, one of the foremost experts on precious metals and monetary systems, argues that not only are we in the midst of a reset, but that much of the world is already quietly living under a new form of digital monetary control. From China's mass adoption of a cashless society to central banks openly laying out their plans for a CBDC-backed financial future, the signs are everywhere. But here's the question every investor should be asking: what does this mean for you? If the traditional system of fiat currencies collapses or transforms beyond recognition, where do you turn to protect your wealth? Will gold, silver, and hard assets reclaim their role as the ultimate safe haven? In this eye-opening clip, Morgan walks us through how central banks, governments, and global institutions like the Bank for International Settlements are engineering the future of money. He also unpacks potential scenarios for what could replace the dollar-dominated system, and why understanding this now is crucial if you want to be ahead of the curve when the next phase of this reset explodes into full view. Please watch, like, and share this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
Well, I would argue that we are in a monetary reset already. China is the prime example of a monetary reset because they use basically a CBDC type of situation. 1 out of every 5 people on the planet is Chinese. So that's that's 20%. And of that 20%, about 80% of them are in the cities. And of the cities, for all practical purposes, you can't buy or sell without WeChat or WeSend or whatever it's called. That is a system on your phone that is a digital currency. Cashless society. So there you have maybe 20% of the population, maybe 15% of the world's population right now in that system. And so that's a given. That's a fact. You can't argue that part. Then what's the rest of the world look like? Well, Mark Carney, who's now risen to the fore again, coming to Canada, when he was heading the Bank of England, he made 3 speeches. They're all basically the same speech, one at the UN, one at Jackson, Wyoming for the Fed, and another one somewhere else, saying that the next monetary system will be a central bank digital currency that is backed by nothing. It has modern money theory to it, and that's the way it's going to be. Now, just because he outlined that's what they're going to do doesn't necessarily mean the market will adopt it, but that's the outline that he made at that time. So we are in the need to reset. And normally, if you go in the past, the reset's pretty obvious. You go to gold my metallic standard has actually worked the best, but we'll just call it a gold standard. So you go from a gold standard to a fiat, it fails, back to a gold standard, it goes to fiat, it fails, go back to gold standard. And that's a very broad brush view, but that's sort of it. And now where do you go? You go back to gold standard? Well, not necessarily, because now we have this thing called central bank digital currencies. We've got, the cryptocurrencies out there. There are other competing things. There's barter clubs and other things that really don't carry a lot of weight, but they're there. Well, I'm looking at $36 trillion is a big number, and mathematically it can't be paid back. However, in the report, this is for January, I said, what if we recollateralize the debt? And we said, well, let's tokenize everything that we, the US of A, own. All the parks, all the rocks in the parks, all the minerals in the parks, all the blades of grass in the parks and the trees, and the animals. Let's tokenize them. Let's not forget the lakes and the rivers. And we do that. Now you're looking at where 36 trillion looks like peanuts, because now you have an asset backing or tokenization of the real world that could be used as a collateral to back up the debt, and you could keep the game going a lot longer. My speech at the New Orleans Gold Show was the new monetary system. And so where do you go to find out the new monetary system? Well, if you look at the pyramid of power, to the all-seeing eye at the top, you go up right next to the all-seeing eye, what do you get? You get the BIS, the Bank of International Settlement.
Yeah.
So I took basically my whole speech off of their website, so there was no ambiguity. Well, David thinks, or David has an opinion, or David subjectively coming up. No, it was like, here's what they said, bang.
Yeah.
I hate to use the word dumbed it down, but I didn't put in like all the fine print because it was useless. You want the big picture, you want it concise, clear, and you want it edified to the point where people walk out of that room going, oh shit. And I think I accomplished that at that speech. So it's clearly in the workings of the banking elites what they want. Again, I'll repeat myself, whether or not we get there or not remains to be determined, but we see what the trend is.
What David Morgan is really pointing to here is something monumental, something that goes far beyond just inflation, interest rates, or another banking crisis. He's talking about the potential end of the current global financial system as we know it, and the rise of an entirely new framework that could dictate how every transaction on Earth is made. Think about it. For decades, the US dollar has reigned supreme as the world's reserve currency. But with unprecedented levels of government debt, endless money printing, and geopolitical shifts away from dollar dominance, the foundation of that system is now crumbling. Central banks are openly discussing the next phase, one where digital currencies replace paper money, and where our economic freedom could hinge on the approval of a centralized system. And as Morgan highlights, this isn't some distant theory. China is already living the reality. With nearly a fifth of the world's population operating under digital surveillance finance, the blueprint for what may come to the West is already in place, whether we realize it or not. But here's the kicker. What happens to real, tangible assets like gold and silver in this environment? If trust in paper currencies evaporates and people flee to something with real value, precious metals could see a renaissance like we haven't witnessed in decades. And yet, if CBDCs gain total control, could those assets also become harder to trade or even outlawed, as history has shown in past monetary resets? These are the critical questions every investor and citizen should be asking right now, because if we are already living in the early stages of a reset, as Morgan argues, then waiting for confirmation may be too late to act. That's why he says to start stockpiling gold now by dollar cost averaging if you haven't been doing so yet, as that might be the only thing to save you and your loved ones when shit truly hits the fan.
What role do you see precious metals playing in our future economy?
It's a real tough one. With the advent of the digital system, which they've been in. I mean, once they started issuing a Diners Club card, which quickly morphed to more advanced credit cards like Visa and MasterCard. But, the Diners Club was like the first piece of plastic that gave you credit with a machine and a number. It's hard for me because I'm biased. I could see we bypass it. In fact, central banks are buying gold at a higher rate than they have in years. So they've got a backup plan. And this is how I see it. I call them as I see them. So this is somewhat subjective. The facts are they're buying gold hand over fist. What does that mean? Well, that you have to use some thinking, and you could agree with me or not, but I look at it as their money of last resort. So if the CBDC doesn't work, they can say, oh, wait a minute. Okay, we'll put out CBDC number 2, and it's tied to gold at a whatever. I don't think it'll ever be convertible. But we had to put so much gold into the kitty before we could issue a Euro CBDC. We had to put so much gold in the kitty before we could issue an Asian
right?
Not Chinese, but an Indonesian CBDC or what have you. So I do think gold certainly could play a role going forward. But back to your specific question, will there be enough people that wake up and put like 5% of their portfolio into gold like in the 70s? Which purportedly was the amount, and I agree probably was, but I can't prove it. It'd be a 5-fold increase in the Western world for gold on the retail level. I don't see that happening. I would love to see it happen, but I don't think it will. I think there's too much distraction in the crypto world. I did 30 podcasts on my website for free, themorganreport.com. Go to the blog, type in crypto conspiracy in the search engine. And the essence of it is two things, really. One is that space basically diverted a lot of money that would have gone into hard assets into this world. The second premise is that it's been subverted and it's run by the whale banking system. And even though it was supposed to be peer-to-peer and we controlled the money and it was non-centralized and it was freedom, it's anything but that. Well, first of all, let's define money. It's primarily unit of account. So how many units do you have? It's a transaction mechanism. And by definition, it's supposed to be a store of value. And today's modern money is not a store of value. So gold is money in the essence that it's a store of value, and that's from a record of about 5,000 years. So what I teach people is, go about your business and put maybe 10% is what I usually say, into gold or precious metals. So if you saved in metal over the last 20 years, you'd be far better off than saving in a bank account. And the best way to save is The Richest Man in Babylon. If you read that book, you save 10%, you pay yourself first. For the last 20, 30, 40 years, what you'll find is you have maintained what that value is more or less the whole time. Mm-hmm. And what that means is you don't need a certified financial planner because if you start the workforce at 20 and you leave at 60, in those 40 years, whatever you saved is going to buy at least as much at 40 years later than it did when you started the workforce. But if you do that in fiat, what you're going to find out is that it's going to probably take 10 times as much fiat for what that first dollar you save. So that'd be point number one. Number two, if you measure things in money and not in fiat, the stock market peaked in like the year 2000. So what that means is on a gold basis, how many ounces of gold does it take to buy the Dow Jones Industrial Average or the S&P 500? It actually peaked a long time ago. And that's one of my favorite books in the back here called The Invisible Crash, written by Jim Dines. So just because the stock market's making new highs, you get a bigger number. But 100,000 or the number, I know it's trillion. Yeah, $100 trillion. So you can have a big number, but it's pretty meaningless. So you can have a big number in the stock market, and that's all it is a big number. But in terms of gold, it's losing value, and that's what the Invisible Crash is all about. Also, I had like a very high-end financial planner call me, and he said, I've been at this 35 years or whatever, and he goes, I have to laugh. He goes, with all the work we've done and all the, algorithms and trading platforms and all we do, especially for our high-end clients, if I just would have put them in gold, they would have been better off. So there's a lot to it. I'm not going to be a maximalist. I'm not going to be a Bitcoin maximalist. I'm not going to be a gold maximalist at all. I think that you should be diversified. I think gold does represent maybe 10% as your savings. And the last thing I want to say about savings, I've been thinking about this lately because I'm always trying to improve. And I'm always trying to improve with my ability to communicate with the general public on why precious metals are important. And then I get feedback, and it's not always positive, and some of it's probably justified. I'm only human. But what I wanted to say now, and I haven't said in a long time, but I did put it in writing, and it's been in writing for a very long time. In the 10 Rules of Silver Investing, I tell everyone to dollar cost average. So if you put that 10% savings or 5 or whatever you could do and just bought, we'll just make up a number, $100 every month into the precious metals. And you did that religiously, or maybe it's 1,000, maybe it's whatever it is. What you're doing is when the price goes down, you're buying more units. So if gold's at 1,000, you're buying more than when it's 2,000. You're buying half as many, but you're buying consistently, which means if you have to cash out because of a medical bill, you're sending your kid to schools, you're going to cash out pretty close to the average price at the time. Mm-hmm. But if you get all, wrapped up in, oh my God, we're running out of silver. I've never seen the market so tight. Right. You can't believe it. Oh, and by the way, the premium's only $14 on a silver maple. You better buy it now or you're going to die. Well, if you buy into that, you're going to buy at the wrong time. You're probably going to buy the wrong kind, and you're probably going to buy too much. So you got to take, again, back to the logical approach.
As you've just heard from David Morgan, the role of precious metals in our future economy isn't just about chasing profits or speculating on price spikes. It's about protecting real value in an uncertain world. In a time when central banks are quietly hoarding gold and digital currencies loom on the horizon, metals like gold and silver stand as time-tested stores of value, a form of savings that has survived every monetary experiment in history. But Morgan also offers a word of caution and wisdom. Don't get caught up in the hype or fear. Instead, take a steady, disciplined approach. Whether it's setting aside a small percentage of your savings in metals or simply dollar-cost averaging month by month, the key is consistency. By doing this, you're not gambling on some future event. You're building real, tangible wealth that holds its value across generations. While markets soar to record highs and digital currencies promise a frictionless future, the invisible crash, the slow erosion of purchasing power, continues in the background. So while others may focus on chasing numbers on a screen, those who quietly accumulate hard assets may ultimately be the ones who preserve their financial sovereignty. So ask yourself, if the world is moving into uncharted financial territory, what's your anchor? For many, the answer lies in the assets that have stood the test of time: gold and silver. Thanks for watching. If you found value in this video, don't forget to like, share, and subscribe for more insights on navigating today's changing financial landscape. And let us know in the comments, what role do you see precious metals playing in your own financial strategy? We'd love to hear from you.